Have we entered a buyer's market? What the heck is a buyer's market? And what is happening in the real estate market in Toronto? We'll answer that in today's video. TRREB just released the numbers for May 2022, so that's comparing May 2021 to May 2022. Sales were down almost 40% year over year and 9% from April, at a time when typically sales are really picking up. But new listings were up a little over 0.5%, and active listings were up almost 26%. So, lots more supply in the marketplace. Average price is up 9.4% year over year, but is now down from February high by 9.1%. So, prices peaked in February and now they're coming back down. But year over year, they're still up. And inventories dropped from, we've been hovering around 0.8, 0.9 months for the last little while, which is why we had this crazy hot market. And now, we're sort of getting up to 2.2, a little over 2.2. But we're still not there yet, right? And so that's why we still see some bidding wars on properties, and some properties are languishing because, really need about 3 months to get it to a healthy inventory level. The sales to new listing ratio, which really measures, sales to new listings, it's in the name. So that fell below 40% for the first time in a long time. It was hovering, in some areas above 70%. So, typically anything above 60 is a seller's market, anything below 40 is a buyer's market, and then in between is a balanced market. So, on paper, we hit a buyer's market, but don't get too excited just yet because, like I said, we're still, not recovered all our inventory yet. The real estate market is like any other market. Yes, we have corrections. It doesn't just go on and on forever, but it doesn't correct evenly across the GTA, right? So, in this case, houses, low-rise houses in the 905 are taking the bulk of the reduction, whereas, condos and semis in the city are only down a little bit. So the reason everything is slowing down and prices are down is, buyers are afraid, basically, right? Any market is a fear-based market. When it's up, people are afraid of missing out, and now they're afraid, what if interest rates go up further? Our price is going to come down, all that stuff. So it's fear. And, interest rates do have a significant impact on our ability to afford a house. A 1% movement in interest rates can mean a 10% drop in your overall affordability of what you can buy. Interest rates are up because central banks, yes, they lied to you. They said they're going to keep interest rates low until 2023. They're not, but they're raising them to combat inflation. And inflation is up, primarily because of oil shocks, food prices, and most of it is because of short-term supply issues. Maybe some is structural longer term as we're on-sourcing things from other countries, but, most of that inflation is due to short-term structural supply issues. And let's face it, we had one of the biggest demand booms ever, the mother of all demand booms, when, things recovered and people started spending money. That's caused lots of shortages, and that's caused inflation. Interestingly, while housing prices have skyrocketed in the last couple of years, rents actually declined and flatlined for a long time. So, that's created an interesting situation for investors. Expectations around inflation and interest rates, etc., are, really that the inflation rate of growth is slowing and will slow. We're expecting sort of economic growth to be 3.5% maybe for 2022, 2.5% for 2023, and then, probably what we'll see is, central banks, not just the Bank of Canada, but around the world, have raised interest rates to combat inflation, but they're probably going to end up causing some sort of recession. Probably we'll see stagflation, which means, shrinking economy, rising prices. But what it means is, at some point, central banks will stop raising rates and probably lower them again. So what's going to happen? Well, we'll probably see, a softer market continue into the short term. The short term could be weeks, it could be months, it could be until next year. You know, no one really knows how long it'll last. We are still seeing bidding wars, right? So, you know, inventory has yet to catch up before we really have that catch, right? And, you know, sellers aren't used to this new normal yet, right? They still expect their property to sell maybe a bit more than the neighbor sold for a few months ago, and maybe now that's not true. The fear will start to come out of the market. You know, truthfully, interest rates are still historically very, very low, you know, and at some point the fear will go away and the buyers will come back to the market. And maybe most importantly, you know, what we're not talking about is we still have real negative interest rates. What that means is if inflation's at 7%, and even if you're paying 3 or 4%, you know, your money, that debt is still shrinking by 3% each and every year. That's a negative interest rate. So, you know, when we look at GTA real estate, especially in the core of the city of Toronto, it's still a very sound market. You know, we're structurally undersupplied, right? We're building 40,000 houses per year, or housing units per year, each and every year for the last 20 years. And population has been increasing about 100,000 people a year for those 20 years. And that's forecast to go up to 200,000. You know, and we're not going to be able to build much more than the 40,000. So, you know, structurally, we're going to have a housing shortage, a housing problem. You know, and if you look at the 40-year increase in real estate, it's 7%. That's a very healthy figure. And there will be a lot of pressure on rents to increase quickly. You know, I said it was interesting we saw the interest rates drop and then stay low for a while. Now they're coming back up, and they're going to have to come back up quickly because vacancy rates are dropping, and they're dropping fast. You know, and we recently listed some properties for rent, which we do for our investor clients, and we've had tons of activity, and they've rented very quickly and had lots of showings. So we anticipate that market, especially when we get to September, is going to be very, very frothy. If you're thinking of buying real estate, Toronto is still a great place to buy real estate, and now might be the one a little break before things get too out of hand again. You know, because structurally, the problems that we've seen are not going to change. You know, even pre-construction, that is slowing. What you'll see, because costs have risen so quickly, you'll start to see some projects get canceled. Builders are focused on completing the ones they have and won't be starting new ones, which will cause longer-term demand problems. So, you know, all that to say, if you're thinking about buying, now is a great time to buy. Probably one of the best in a very long time. And if you're thinking of selling, if you don't have to sell, you know, we would say probably wait if you can. But if you're upsizing, then that's a great time because the property you buy is probably down more than the value of the thing you're going to sell. If you have any questions, shoot us an email, info@thinkto.ca. We hope you enjoy this video. Please like it so we know to make more, and smash that subscribe button so you get updated each and every week when we post a new video. Talk soon.